All right, morning, guys. This is Fidelity Q1 2026 earnings report. So, from the headlines, you see that revenue increased by 38%, but profit dropped by 18%. How is it possible? Let's dive into the numbers. So, when you look at the income statement here, the snapshot, which you can get from our S page, go download it there. You see that um, some things increased. You see that their credit loss expenses increased, interest expenses also increased, then personal expenses, depreciation, and other operating expenses, all of them ticked up. So that added to erode the profit they made. So expenses cost led to the reduction in the expenses, but there are some things that lead to the reduction in the profit they booked. Then the other side of things, if you look at the key ratios below, you see that so many things are ticking up. One good thing about this is that the non-interest side of the business is making money more than it did last year, which is the fee side of the business is always good. Remember that banks make money from two things: interest income and non-interest income. So the non-interest arm of the business is doing pretty good. Then if you overlay the balance sheet, you know that the assets grew to overlay the balance sheet. If you look at the key ratios in the balance sheet, if you also look at the equity side of the balance sheet, it's also increased. Remember, they did recapitalization by CBN, so the balance sheet is looking healthy. The only thing you have to look at are the key ratios in the balance sheet is that you know that loan to deposit marginally increased, which is healthy. Then if you look at the leverage ratio, it's looking pretty nice, it's on a safe side. But the non-interest margin side of things, the return on assets and others are not looking pretty okay as a result of those costs we told you. As a result of cost we told you, if you overlay it, you know that cost is eating up in the balance sheet. Then the other thing off balance sheet item is that number one is that the provision for litigation is also increasing. How can your litigation and claim move from 2.2 billion to over 19 billion? So it's good to watch it out. Then non-balance sheet commitment is also drastically increasing. How do you have a over 2.75 trillion in non-balance sheet commitment? Some bulk of that item is a letter of credit, which is over a trillion plus. Then underdrawn overdraft and the rest, so they have to look at it very well to know the commitment they are making over there. Then it's interesting to also know that they have an obligation, Eurobond obligation, that is coming up that they need to clear from Afriems. So all eye on that. And you have to know that that obligation is sitting at over 17.65625%. So all eye on that. That is Fidelity for